All right, here we go. We're going to do a wallet review for one of our members. They send in a public wallet address. I run them through APY Vision and it spits out all the data. I export it and pop it into this spreadsheet. So if you need a basic overview, feel free to join my Discord, the link below, and you could put in a request for that. So and I could just do a basic overview, show you your P&L, your impermanent loss, how you're performing, and just kind of give you a general idea of where you're at in your liquidity pool farming. All right. I noticed that there was a couple large positions that were overly large. So I took them out. Here we go. I'm just going to show them as these two up here. The number is rather large. I don't think it really recorded the data properly. So just take note of that. So I left those out. Otherwise, it would have been like 100 million or it was something crazy. So let's kind of look in. Let's look over here. Let's kind of zoom in here. We're looking at column B here, and you could kind of see how much you're investing on average into each liquidity pool. Here it shows $458, your average exit, $460. So you're making a $2.47 profit per pool. You've generated a lot of liquidity pools, over 200 pools. I can show you here. So you could see on the bottom here, 250 liquidity pools, or about 240 pools because it starts at column 11 or row 11. But the total fee collected, $48.72, which that's a lot of yield. You're generating a lot of yield, and that's I see why, because you're in a lot of volatile pools, like altcoin pools. So you seem to be very active, very tight ranges. So and to generate these yields, but you can see you're doing there's a trade-off here, right? You're doing a lot of work for the overall gain. Right. So you've got a total gain of $587, right? Since August. Now that's a lot of work for that gain, right? Yeah. You're not earning enough for the amount of work you're putting in, right? That's 250 liquidity pools since August, 10 months of farming, right? 24 pools per month. You're fairly active, right? So you got to think about the slippage, the fees, right? All this comes into play, right? A total yield of 48.72. The amount of yield that you're earning based on the average initial capital here on column B2 is 1,063%, which is great. That's a great return. But I think what we need to focus on here, how do we capture most of that yield and keep it, right? You've probably gained a lot in yield, but they've probably also went down in value, or the overall liquidity pool. So, it kind of just balances out, right? And it comes to a point where you got to think like, is it worth the effort, right? And you've made, say on a $10,000 bankroll, right? 5.87% since over the course of about a year, right? With all that work, right? So it's, if you think about it, the risk-free rate, if you just pop it into like a bank account or like a money market fund, right? You could get like 4.5%, right? So, and that's with doing no work, right? So, but if it's a way for you to learn and understand how liquidity pool is working, then that's great. But the idea here is, as you're learning, track it. You got to track it. Understand what you're doing. Understand where your shortcomings, where you can improve, where are your strengths, right? And that's how you track it, and you really get down to the nitty gritty of it, right? I don't know the details or the mindset of, or what you're thinking behind each of these liquidity pools. I'm not going that deep into this, but it's just kind of giving you a general overview here. The fee APR here is showing in column G, is showing the amount you will be able to earn if you keep up this trajectory in yield over the course of a year. So that's what that number's for. Here's your total gain, $587. You made 5.87% on 10 grand. So if you have a different amount here, like 5 grand, 15, 20, you could put this here and then just kind of calculate this number, 587 by the number here, and then you'll get your percentage, your actual percentage of what you're earning. I just don't know what your deposit was. Column I shows a projected earnings if you continue on this path, right? So over the course of the next year, if everything was to stay the same, this is how much you could earn over the next year, right? So, but just kind of giving you an idea of, okay, if I keep up this performance, this is possible. Then over here in column J, you could see the impermanent loss versus your yield. So this is showing your performance based on a HODL wallet, right? That say someone that mimicked your exact trades, got in when you got in, got out when you got out, but they weren't yield farming. They were just holding the tokens in their wallet. And then when you exited your pool, they close out their position. You get into a new pool, they open a new position, right? So that's your performance on top of someone that's hodling. So you're beating out someone that's hodling, right? You're beating them out by 4%. You earned an extra 471. What you want is, as long as this number is positive, that's great. You're utilizing yield farming in the right way, right? A lot of people, that I run these analysis for, usually see the numbers in a negative, right? In a deep negative, and it's like, well, you're deeply in negative, so all this effort is for nothing. You would have been better off just holding, right? Holding these tokens instead of farming them, right? And you would have been better off just trading, right? So, but this just kind of gives you an idea of like, how are you performing versus a trader versus holding, right? The same positions. But other than that, that's a general overview. Hopefully you got some value from it. Leave a comment or feel free to DM me and we can talk. All right. Thanks.